Welcome back to the Discount Property Investor Podcast. Our mission is to share what we have learned from our experience and the experience of others to help you make more money investing like a pro. We want to teach you how to create wealth by investing in real estate the Discount Property Investor way. To jumpstart your real estate investing career, visit freewholesalecourse.com, the most complete free course on wholesaling real estate ever. Thanks for tuning in.
All right, guys, welcome back to the Discount Property Investor Podcast. I am your host, David Dodge, and today I am joined by an awesome guy, a great friend of mine, a beast in business, Mr. Sharad. Sharad is the owner of Resimpli, and I'm really excited to have Sharad on the show today. Guys and girls, before we jump in and get started here, I want to mention that it's been a long time since I've done some of these podcasts. The last episode I published, I believe, was back in December of 2022, and today's date is December of 2022. Today's date is September 20th of 2023, so it's been about 10 months, almost 11 months since we've done a podcast, and I'm just excited to get back into podcasting, providing value to you all, my audience, my listeners, and it also gives me the opportunity to connect with really good friends like Mr. Sharad here. So thanks for being a valued listener, and we all are going to be doing this more consistently moving forward. This is just my way of getting it going again here, folks. So thanks for being here. Sharad, what's up, man? How are you? Welcome to the show.
Yeah, thank you, man. Super excited to be here. Yeah, just moved here. I did a move from Canada back to Carlsbad, California 2 months ago. It'll actually be exactly 2 months tomorrow. So just getting settled in to, new life, kids and everything. But yeah, it's been good so far. It's so excited to connect with you, man. We haven't talked in I think 2 or 3 months. Yeah.
It's been a couple months, man.
Yeah.
So for all those people out here that don't know Sharad, fill us in real quick. Give us a quick bio and then we get some other topics here, man.
Yeah, so I am the owner and founder of Resimpli, active real estate investor. I invest in Northwest Indiana market. So for anyone who's not familiar, this is right outside of Chicago. I used to live in downtown Chicago. That's why I picked the Northwest Indiana market. It's practically 30 to 45 minutes outside of Chicago. I do about 20, 25 flips a year. I've done about over 750 deals since I bought my first property back in August 2010 to today. I've done over 750 deals, but now I do about 20 to 25 deals a year. I own a property management company and I own about 50 rental units of my own.
Man, that is phenomenal. Sharad, thank you so much for filling everybody in. I know that you mentioned here in that bio that you started out in Chicago, living there and then investing in Northwest Indiana. Then I know you had moved to California.
Right.
Then you could move to Canada, and now you're back to California. Did I miss any stops along the way?
No, you did not. You got it. I mean, I started out with, I went to school in New York, so that's the only one. Yeah.
Okay.
I went to school in New York, moved to Chicago for my job, then moved to California, then Canada, then back to California. Yeah.
Man, oh man, that's awesome. How long were you in Canada for? I'm guessing maybe 2 years, 3?
3 short years, man. Yeah.
3 short years. Did you love it?
3 short.
I mean, what?
I loved it up there. I think it's the weather that kind of my wife couldn't deal with.
The weather?
Yeah. The weather, yeah. That's the main thing.
I totally get that, man. Totally get that. Yeah, you guys have, San Diego, you can't really beat the weather. It's some of the best weather in the world.
Yeah, it's been amazing. I've been playing a lot of pickleball here since I moved. So, yeah, I've been getting a lot of vitamin D.
Dude, that is phenomenal. I love hearing that. That is so cool, man.
Yeah.
Tony Javier lives in San Diego.
Yeah, I actually bumped into him the other day. Yeah,
I was going to say, and he's a huge pickleballer.
Dude, he beat my ass. Yeah. He's really good. Yeah.
I like to refer to him as pickleballers.
Yeah. He's really good.
Yeah, that's awesome, man. That's so cool. So back in San Diego for about 2 months, is that right? Give or take?
For 2 months. Yeah, exactly 2 months now.
Nice, man. Nice. And cool. Well, guys, today's topic, obviously, I love just connecting with friends and beasts in the business, and Sharad checks both those boxes here. He's one of my favorite humans, just a really, really great, genuine guy, down to earth, has a heart of gold. And again, I'm really grateful to have the opportunity just to get to chat with Sharad for, 20, 30 minutes. But we want to provide some value to you all too as well. So the topic for today's episode is really just going to be, the state of the economy, what Sharad and I have both been seeing in the different markets that we're in, how things have really changed since COVID. And I mean, man, COVID's been over for, is it 2 years now? Has it been that long?
I don't know. If you live in California, you don't know if it's over or not.
Yeah. Well, there you go. There you go, man. That's true. That's true.
Yeah.
So with that being said, or go ahead, please.
Yeah, I was supposed to say, I think I'd say like it's still this year that we noticed like the biggest shift like in terms of slowdown. I think of course like interest rate given where they are right now is like the biggest factor right now. There's still people out there looking to buy houses, but there's no inventory. Like you look at interest rate is, as of right now, it's over like 7% on a 30-year fix. And it's high. And, I have friends that bought their houses like in last 3-5 years, and they have a 30-year fixed mortgage of less than 3%, right? Less than 4%. And they want to move, but they don't want to lose that 3-4% mortgage. Because you go from 3-4% to like double that, for the same mortgage that you were paying on, let's say, $100,000 house, you can only buy $60,000 house, and prices have only gone up. So you don't.
So you're saying that people have, because we've gone from about, and I'm looking at prime right now, and I'll share my screen with you just because it'll help me and you chat about it. If you're listening to this, you won't be able to see it, but no big deal. But this is prime, basically, historical prime rates. And for those that aren't aware, prime is the interest rate that the bank gives to its very best customers, typically. If you're doing commercial loans, you're typically going to pay prime plus 1%, 1.5%, maybe even a little less, but, you're typically going to pay a little bit above prime. But, the low, from what I'm seeing here in the last, 3-4 years, was in March of 2020, and it was at 3.25%. And that was as of July of this year. So what's that, about about a little over 3 years? Yeah. We've gone from 3.25% to 8.5%.
Right.
That's more than double, man.
Yeah. So if you look at now, if you just factor in the interest, the mortgage payment, that's like crazy. It's more than double. I mean, that's not the interest rate, but when it's like, it's in relation to that. But when you look at like literally the interest rates have doubled in last 3 years. I think that's been the biggest challenge, that homeowners don't want to sell and lose that low interest rate. I think if it's, I was reading somebody the other day, like the tipping point is 5.5% for most homeowners. So if it hits that 5 to 5.5%, that's when people are really willing to just say, all right, I'm comfortable with 5 to 5.5%. And I say to go ahead, but it's like 7.5% right now. That freaks people out. Like I bought my house where we live in California in April. We got 5.875%, and it was 7-year arms, 30-year amortization. If I were buying right now at 7.5, I don't know, I would seriously consider it. I would be like, you know what? Let's just rent out for another year or two. Let's just see where the market is going. I think for me, the trigger was like 6%. If I was able to get below 6%, I was like, okay, I'm comfortable. But like 7%, 7.5%, that makes me a little bit uncomfortable.
It is. It's high.
It is super high, man. It is super high. And then the challenge with that is, David, when you look at it, let's say that you lock in at 7%, right? The interest rate goes down to, let's say, 6.75. You don't know if you should refinance now or just wait. If you refinance, it takes you like 5 to 7 years to break even. And then you do that and you're like, okay, wait a minute. I refinanced just 6 months ago at 6.75. Now it's back to 6.5. So I think there's a lot of uncertainty. People they anticipate the interest rate will come down. But because it's so high right now, people are like, you know what, I'm comfortable just sitting this crazy market out and just see where the interest rate are going to land in maybe 12 months to 18 months. And that's what I would have done if my mortgage payment was going to be at 7%. I'm like, you know what? I just don't want to be, for me, it was the 6%. But the survey that I read, for most people, it's 5.5%. And we're starting to notice that so we do a lot of turnkey properties. So for anybody who's not familiar, we buy a fixer-upper, we rehab it, but instead of selling it to a homeowner, we sell it to an investor.
Mm-hmm.
And now we're noticing investors also like kind of backing up, just taking a pause and saying, you know what, we're just going to sit this one out because it's 7% interest rate, 7.5%. Like we just sold a property last Friday. It's a 2-unit, so really good cash flowing property, but the investor who bought the property, his interest rate was almost 8%. I think it was like 7.5 or 7.875, something in that range. So when you look at it, the properties that you're selling, it has to be really, really good cash flowing properties for us as turnkey. So we have a single family house 6 months ago or a year ago, we would have like people lining up for that house. And now my project manager told me that the investors that were reaching out to, and they're saying, hey, you know what, I'm going to set this one out. But if you have a multi-unit, like 2 to 4 units, I would be interested in that because they feel a little bit more comfortable buying multi-unit property versus buying a single family and a tenant moves out, then you have like...
Yeah, and then you have 100% vacancy versus...
Exactly. Versus like 50% if just, 2-unit, one tenant moves out. So I think that's what we're noticing. Like even when you look at it, David, like if you were in the market or I were in the market and you were looking to buy a property for yourself, whether it's primary residence or a rental property, like 6.5%, 7.5%, that would make you a bit uncomfortable. That's really hard.
Yeah. So I'm an idiot in terms of not keeping an eye on my own mortgage, Sharad. And I had a commercial loan. Well, kind of a commercial loan. I guess it was an ARM. It was amortized over 30 years, but it was a fixed rate for 5. And then it started adjusting year over year. And this is about 15 months ago. And my rate was 4.5. And the most that it could adjust each year was, I believe, 1 or 1.5%. And I ended up just refinancing at 6.25. And that's a fixed rate for 30 years. Knowing that, if it goes down below, I can obviously refinance again. There is that break-even period that you had mentioned. But now we're above that by at least 1.5%. So I'm actually kind of glad I did that back.
Right.
I did. That was probably about a year, 15 months ago, give or take. And I'm not thrilled with a 6.25% rate on my own primary residence, but it's better than the 7.5 that we would.
Yeah,
exactly. Today. And it's crazy because that 7.5 is primary residence.
Yeah.
If you are an investor, there's additional risk. So some of the loans that I've gotten recently, not a ton, but I've gotten a few loans at 8%. And I even have one, and then this is on investment properties, at 8.5%.
Yeah.
It still works. I still bought it low enough and it still cash flows. 2 years ago,
property.
2 years ago, we were in the 5s, and 3 years ago, we were in the low 4s and high 3s.
Exactly.
It's just crazy.
And it's different for investment property, right? For investment property, you can say, all right, if I'm paying 8%, this is what my mortgage, then I need the price to be adjusted to make the numbers make sense, right? But when you look at like the bulk of the market, the majority of the houses buying, people buying and selling are people that are buying their primary residence, right? And that's the demographic that feels really uncomfortable, locking in interest rate of 7.5%, 8%. It would freak me out, like I'm paying. And just, they're also like, even if I could afford it, even if somebody could afford it, it's just the fact that a buddy of mine just bought their house 3 years ago, they're paying like 3%, and I'm paying almost 3 times that interest rate.
Almost 3 times.
Almost 3. Like, can you imagine? Like almost 3 times. Like I kid you not, my friend, he bought his house in LA and he has 30-year fixed at 2.5%.
Holy cow.
2.5%. So I literally, if I were buying right now, I'd pay 7.5%. Like 3 times what?
3 times.
It's just 3 times. 3 times interest. It's not 3% more. It's like,
no, it's 3 times. 3 times.
How crazy is that? I think
that is crazy. I got a line. I have a HELOC right now on my primary residence, and I use it sometimes. It's actually utilized at the moment on a motel conversion that I'm doing. But I utilize it from time to time over the last 5-6 years to to, just do deals and, not have to pay higher rates with private or hard money lenders. Sharad, I've had either a HELOC or a revolving line of credit. Basically those are a little different, but there's basically the same thing at the end of the day. For about 6 years now, maybe even 7 years at this point. And my current rate is 9.25%.
Yeah, same here.
9.25% on my HELOC. Now I'm used to 4.5%, maybe 5%. No big deal. It's going to be higher than, your typical loan because there's a little bit more risk. It's a second mortgage and, so on and so forth. But Prime, as we mentioned back in July, they upped it to 8.5%. And I don't believe that they've changed it since the 27th of July of 2023. But we're probably going to be looking at another raise sometime soon. You think, maybe not. But either way, because it's, one of these things where they tack on another, in this case, 75 basis points on top of Prime. I'm paying 9.25% right now on several $100,000 that I have utilized on this HELOC. But what do you do? But here's the thing. At the end of the day, that's still cheaper than a private or a hard money lender. Most of my private lenders are 11 or 12%. Hard money's 14 to 18%. Right? So it's still cheaper. But man, oh man, I never would have thought in my wildest dreams 3, 4, 5 years ago, if I was to say, hey, what do you think that this is going to get to at some point? I would have maybe been like, I don't know, 7, 7.5.
Right.
I would have never thought 9.25%.
9. Yeah.
Oh.
I have a line of credit on my rental properties. Exact same thing. Pretty similar to you. Like I've had it for about 6, 7 years. It started at like 4, 5%, if I remember. And it adjusts every year, and it's gone up to like 9.5%.
My HELOC adjusts monthly.
Oh, it does?
Yeah. It's not your typical revolving line, like, because I've had those too with rentals, and those typically adjust yearly. Here's a pro tip for you. You can negotiate a 2-year term.
Oh, interesting.
So next time that they say, hey, you want to renew, say only if I can get a 2-year term. Yeah. And the cool part is if the rates go below that, then you can have them adjusted. But if they
interesting,
you're locked in.
But
now, a HELOC on the other, I didn't know this until just recently. A HELOC on the other hand is a whole different product altogether. When you're doing the revolving lines, every couple years they're typically going to want an appraisal. HELOCs are good for 10 years, and then at the end, if they're not zeroed out, they convert into like a 20-year loan.
Really,
it's a whole different product altogether. Now you can't do a HELOC on an outside of a primary residence, though. It's got to be the revolving lines that you're referring to. Yeah, definitely. But if you have equity,
I didn't know that.
Primary residence,
that's a good tip.
Not that the interest rate's going to be any better. It's just
I know, but it's
just more frequently. But you get a long time to pay it back.
Yeah, no, that's good to know. I mean, I had a private money lender reach out to me the other day, and he said, "Hey, I have about $400,000 or $500,000. Would you like to borrow?" And this is the person that I borrowed money in the past, like 8, 9%. Like a couple of points more than what I was paying at the bank. And I said, how much would you want? He said like 12%. I'm like, you know what? It just seems a little pricey right now. So I said, I'm just...
Yeah, keep them in your back pocket.
Yeah.
I could be in, but that...
Yeah, exactly. It's a lot, man. It puts a little bit of pressure on you, because in order to now financially support that 12%, I have to find much better deals, but it's the opposite. Like the deals that we're finding are, slimmer margin, harder to sell, especially in our business, like turnkey. It's getting a little bit tricky selling those turnkey properties. I'm like, man, 12%, it just puts more pressure on the team to get to that number, holding costs and everything goes up. So, I mean, for me personally, the biggest issue that I see with the market right now is interest rate. Like, hands down, like there's a lot of people that want to move. But I mean, even within, my friend circle, my family, I've talked to like a few people, they're like, yeah, we want to move, but, like I just feel so locked in with this low interest rate.
Yeah, I mean, if you're going to be able to only get, what would you say, 60% of the purchasing power that you had 3 years ago?
Yeah.
So, that's crazy. Like if you're in a lower rate, you sell, and then you don't have that rate, and then you go buy something with that higher rate, you can only buy 60% of what you could 3 years ago.
And also keep in mind, in last 3 years, the house that you're getting now for $60,000, it wasn't worth $60,000 before. Like that's also gone up.
Yeah, you may have more equity, guys and girls, but just because you have more equity doesn't mean that you're going to be able to go get a great deal on the next purchase, right?
Yep. So the house that you're getting at 60%, it may have only been worth 40,000 or 30,000. It's doubled or gone up like, 40, 50, 60%. So your purchase power has significantly gone down if you're looking to like trade up a house. So I think that's the challenge. A lot of people feel like they're locked in right now. It's just a higher interest rate. Because of that, there's not enough inventory. Like there's just not enough inventory. Like you're looking at houses to buy, like a couple of houses to choose from. It's still, if you're flipping houses, if you're able to find a decent deal, and depending on the market that you're in, I think for us, when we're selling a property, what we're looking at is, okay, even at 7.5%, 8% mortgage interest rate, what is the mortgage payment on this house? Let's say if I'm just making it up on a house, just a random house, that's $2,000, right? If someone were buying this house, and in our market, we can sell FHA, so let's say on a $200,000 house, someone is putting like $7,000 on that house. And in a lot of these cases, we're able to give them credit, so they're coming out of pocket with very little money. What would be the rent on this house? If it's close to $2,000, if it's like plus minus 10%, and then, with the credits that we can give an FHA loan, then there's a good demand for those houses. People still want to have, the feeling of home ownership, but they have to make, it has to make financial sense. And at that 150 to 250 price point, at least in our market, it still makes sense.
Still does.
That still does if we can find a deal, because we're able to sell these properties to someone that can do an FHA loan, right? We're able to give them credit to make it like very, very good deal for them, where it's actually cheaper for them to own a home than it is for them to rent the same property. Because if they're renting the same property, they would have to have first month rent and last month rent $4,000. But if you're doing FHA loan, in some cases, you could give them a lot of credit, so they're really not coming out of pocket even $4,000, and then their mortgage payment would be less than the rent. So I think that's where you have to calculate, like look at plus minus 10% or so, and if it makes sense, if the numbers make sense, like those are the kind of properties we're buying. In our market, it's like 150 to 250 price point. We just locked a deal this week for 117,000 that we're gonna buy, and it's crazy, man. Like 4 or 5 years ago, we wouldn't have even paid like 60,000 for this house. It still feels so weird paying like double of what I would have paid for this house like 4 or 5 years ago. But the resale value has also gone up. We'll lock it up for 170, needs about 40, and we'll sell it for about 225. And it's a perfect house where if somebody was renting it, versus what they would pay on the mortgage would be pretty similar. Those houses are still making a lot of financial sense, but the challenge is it's so much harder to find those houses.
So speaking of that, interest rates are up, but inventory is down.
Yep.
I mean, and like coming across a really good deal, it's not impossible by any means. Yep. Sharad, I'm sure you find a couple a month. I find a couple a month, but back to when the interest rates were low fours, high threes, I feel like I could stumble across a couple deals a week.
Yep. Exactly.
And now it's like, man, I'm really digging kind of hard to try to find some deals. Again, they are out there, folks. Don't let me discourage you with my naysayer talk here today. Deals are still out there. I'm still doing several deals each and every month, and I know Sharad is too. So they are out there. But that brings me to the next point here. So, interest rates are up, inventory is down, and I think we talked a little bit about why people are reluctant to sell and get rid of the lower rate that they have currently to then jump into a higher rate. I think that's a part of it. There's probably more to the equation there as well. I know a lot of builders aren't really doing a ton of building right now because their costs are through the roof as well.
Yeah.
And they're getting squeezed, and the risk is being increased because of all these squeezes. So you have a lot of different variables that are going into this. But I do want to talk about a couple topics here real quick. Number one, I want to talk about BRRRR in this economy. If you're doing it, how that's working. I'm still doing BRRRRs, but again, we'll get into that. Number two, I want to talk about some wholesaling opportunities, because it seems that this market is really had presented itself to make sense to do more of that, at least for me. And then last but not least, I want to finish up talking about Resimpli and how much I love it and some of the cool updates you guys have launched. So BRRRR, let's talk about BRRRR, man. Are you doing BRRRR still?
I'm not, just because of, like my business model is like buying houses, either selling them to other investors or selling them to, homeowners. So we're still focusing on that.
So investors so retail for the owner occupant or investors.
Right.
So you're make
Investor.
ready. You're buying them distressed, fixing them.
Exactly.
And then selling it to one of those two people primarily.
Yeah.
Cool.
Yeah. But I tell all the newer investors starting out, my wife wasn't on board with this because she didn't just like the idea. If I had my choice, what I would do is I would buy a 4-unit, just the bird method. I would buy a 4-unit fixer-upper, live in 1 unit, get an FHA loan or whatever loan you qualify for, rent out the others, and then just do that. Like that's what I would do in my business, like start out with a primary residence. Or, when I started out with my rental properties, I did the bird method. I didn't know it was called the bird method, but I went out, paid cash for the properties, rehab them, rented them out, and then refinanced them, took the money, and then just did the same process with a few other properties. I think there's still good opportunity for that, but it just comes down to finding the right deal, right? You have to make your money when you buy the property.
When you buy.
That's right. When you buy.
Like that's the whole motto of this podcast, guys. Yeah. Discount property investor. We're making our money when we buy.
Exactly. Yeah, that is so relevant. Like you have to buy property at discount. If not, there's nothing you can do.
There's nothing the only way to make money if you don't buy it at a discount is to factor in a lot of time. That's it. Yeah. It's the only way. It's the only way to do it.
Yep, exactly. But then you look at like how much money are you making? If you buy $100,000 property now, and it goes up to like $110,000 in 10 years, you made 10,000, but did you really make 10,000?
No, because when you go to sell it, you're going to pay that 10 grand just to sell it.
Exactly. And then you factor in the inflation, you could have made a lot more money. Like you can put your money in the bank right now and get 6%. Right?
Isn't that wild?
Isn't that, think
just
about
cash.
That's crazy.
I know.
Cash. Like you could make $6,000 on that $100,000 right now, not doing anything. Just put it in the bank and just sit back.
That leads me to just another little subtopic here. Like these interest rates are really affecting the poor and the middle class more than they are the rich. Like the rich they're actually kind of excited about these higher rates. Now, of course, if they're going to go buy a big house, a yacht, a plane, whatever it is that they want, they're going to be paying more in terms of if they're financing it. But if they have all this extra cash laying around, they don't even need to take the risk of investing it in stocks or businesses or S&P or whatever. They may not make 12 or 15%, but they can make 6% risk free.
Exactly. Like if you're getting 6, you can actually get the private money lender that I was telling you about. He asked me, "Hey, Sharad, you need money?" And I said no, because his bank was offering him, I think he said 7.5%, 7 to 7.5% fixed CD on 6-month CD. Like imagine you can just put your money
7.5%. That's
7.5%. You don't have to do anything. You don't have to. I agree. If you have money, it's like absolutely risk-free money. Like you make 6-7% without taking any risk, and that's shifting the appetite of everyone, right? If the investor that I'm borrowing from, if he's able to get 6-7% without taking any risk, he would at least want double of that.
To take risk, right?
Yeah, to take risk. Even though he's been lending me money for like 3-4 years now, but then when you start factoring it starts trickling down, starts affecting you in every way. If I'm borrowing money at 12%, I have to make sure that I'm able to financially support that 12%. But given where the market is right now, it's so challenging to find those deals. So I think like the biggest factor right now I see is like interest rate. Like once that starts coming down, like once it starts coming back to like 6.5%, that's when people are going to start feeling a little bit more comfortable. Like
I agree with that with that article you're referring to, or that poll that was in that article. I think 7, 7.5, 8, 8.5 even is just like people, it's shell shock. People are just like, oh my goodness, this is crazy. Whenever I refinanced mine and 15 months ago at 6.25 at the time, I'm like, this is crazy. I came from a 4.4, 4.5% to 6.25. And even that is like a 50% increase, right? Maybe not quite, but close. And I'm like, holy cow, that's crazy. But like, that's a whole lot better than 7.5 or 8% now.
Exactly.
So I guess it is all relative, but either way,
all relative,
rates are crazy, man. They're crazy.
Yep.
So I'm glad, that you had found a disposition strategy that is working for you in terms of buying, fixing, selling to the owner occupants as a primary residence, or selling to an investor. Either way, it's essentially a turnkey sale for either party. We're doing some of that right now. We're still doing some BRRRRs. I say some, like maybe 1 or 2 at a time. However, we've pivoted a little bit on the exit of the BRRRR, meaning we're still doing the process of buying at a discount off market, rehabbing the property, renting it out, and then refinancing. However, when it comes to the renting out part, we have pivoted into doing more lease options, but we're doing it inside of land trusts. So it gives us a little bit more protection by doing it through the trust. And we're getting the down payment, or I shouldn't even say down payment. It's an option fee, not a deposit. We're getting that option fee, and it's basically helping us in a couple different ways. It's helping us maintain cash flow, even with higher rates, because we're no longer dealing with the day-to-day maintenance. Now, if the HVAC goes out or the roof starts leaking, and it's over $500 or $700, depending on the tenant, we'll come in and we'll work with them. We'll split it. Sometimes we'll even lend them the money and do the repairs, but they have to pay us back over time. So it's allowed us to be able to still continue to do BRRRR, but we've had to make some pivots along the way to be able to maintain it. It's definitely more difficult. And the way to do it in this market, in this economy with these rates, is just to buy better. It'll still work if you buy better, but if but inventory's making that hard too.
Exactly. Like no strategy is gonna work if you've overpaid for.
If you've overpaid,
if you've overpaid, there's nothing you can do. There's nothing you can do. I mean, then you just have to, either wait for time or just figure out some other way how you can add value. Like you're adding value before you buy the property by buying it at discount like you said, the whole, your motto is like discount properties. So you buy that discount upfront. That's where you've added value. But once you've overpaid, then you're just in a really tough situation. Like you really, really have to dig deep to figure out, how do I add value?
You gotta get them low, guys.
You
gotta buy discounted properties. If you're not, you're taking on too much risk, or more risk than you need to be taking on. So, all right, next topic: wholetailing. I have always thought wholetailing was such a great strategy. However, I haven't been really utilizing wholetailing that much up until about the last 5, 6 months, 7 months, maybe give or take. Call it 6, right? Pretty recent. And the reason is that I hadn't done it in the past is typically whenever we're out and we're finding really discounted properties like Sharad and I are referring to and talking about here, they typically need a lot of work, right? Can you buy a property at a discount that doesn't need any work? Yes, you can. It's much more difficult to find those, right? Over the last couple months, Sharad, we have been buying properties at discounts that, and here's the thing, when you're doing wholetailing, you still need, I guess there's lots of ways to do it, of course, but the way I look at it is it's much easier to do a flip on a property in terms of a wholetail when the property is still functional, right? So some of the things that we're doing right now is if we buy a house that we would normally fix up and then sell, but the kitchen's there. Yeah, it might be super dated. The water heater works. The HVAC works. The roof doesn't leak. Yeah, all these things may be dated, but they're functional. They don't leak. They work. Same with the bathrooms, right? What we've decided to do over the last couple months, call it 6 months, is just throw them up on the MLS and just kind of see what happens before we jump in and spend 30, 40, 50,000 rehabbing them. And what I've noticed, because, this is not so much of interest rates, that's not really eligible in this conversation. It has an effect, of course, but I'm really referring to just the fact that inventory is so low that what we've seen is we're making, this is kind of cool, Sharad, we're making about as much money on our wholetails right now as we are on the full-blown fix and flips, like $40,000, $50,000. And all we're typically doing, I've got 2 of them right now that are going to be closing in the next 2. Well, one of them next week, one the week after. One of them is going to be 53,000 in profit. One of them is going to be about 44,000 in profit. And we didn't fix these properties. We bought them at a discount. Now, here's what we are doing. We're cleaning them out and we're cleaning them up.
Just make them move in.
That's
ready.
it.
It doesn't have to be fancy.
That's it. So basically like $3,000, $4,000. Now we are starting the process to do the occupancy on both of them, but again, they're both very functional. So, we may have another 1,000 or 2 to get the occupancy to be passed on these particular properties, but we're selling them on the MLS as is with seller to do no repairs outside of getting it occupancy ready. That's the thing. It's very difficult to do a wholesale. I don't know, maybe let me take my words back here for a second. It's not very difficult to do a wholesale when the property isn't move-in ready. It's just much easier. Let's go with that. Much easier, right? Again, if the property doesn't have a kitchen, wholesaling it's not necessarily going to be the best option unless you're just trying to find those investor buyers, right?
Right.
But the approach of doing it like you're doing, where you fix them and sell them turnkey, they're going to sell faster. They're going to sell for more. But again, I would say that over the last couple of months, we've had some really good success with buying properties at a discount that didn't need full blown rehabs. They kind of do, but they're functional as they.
I would do that. I would rather make a little bit less money, like in
and not have any.
You're doing not have any of that to deal with. I mean, I would rather be in and out of their property in 2 months. Spend like 50,000.
Yeah,
go through
the maybe 5, 6, 7 months.
Yeah,
6, 7
exactly,
months.
Exactly. I would much rather do that. I mean, we've done some of those. I'm trying to think. I don't think we've done any this year, but maybe we've done like some wholesaling to investors, but not like in your traditional sense.
And for those that are new, wholesaling just simply means buying off the market and selling on. That's the simplest definition of a wholesale. You're buying it via wholesaling methods off the market, and you're selling it via retail methods. And it's just
and then just cleaning it up, combined. The property, just
clean it up, clean it out.
Just make it like basically move-in ready, functional.
But I have zero desire to go place a roof or do the windows or do an HVAC on a wholesale if they work. They may be dated, they may need it, but you can move in today and maybe get a couple years out of it without having to do those.
Yeah, we've done some of those where we said, hey, typically we would sell this property for $200,000, but and we tell our investors,
and that's with the rehab, you're saying?
With the rehab and everything. So we'll sell for $200,000, where we say, all right, we're going to sell you this property for $190,000, knowing that it needs, a roof. Roof is fine right now. It doesn't need anything for next 3 to 5 years.
3 to 5 years,
reducing the price just so that you get the value out of it, and then it's not fully updated. And they're happy with that. They feel like they're getting a discount. Instead of $200,000, they're getting it for $190,000 or $185,000 or whatever they negotiate.
That's really what I'm looking at right now in terms of like the best deals, my favorite deals. Like, again, they're going to be harder to find. Inventory's already low, so they're going to be a little bit more harder to find. But I have to say, they are the easiest deals that make the most amount of money in terms of the amount of effort that you're taking.
100%.
And I'm loving those.
And it's also the amount of money and amount of time that you spend on it. It's going to be much less than doing a full rehab. And then you're able to recycle your cash a lot more, in a year than you would do with the rehab. So I agree with you. I mean, we just haven't had good luck finding those. We're negotiating one right now, actually through MLS, believe it or not, that we're looking at. And then we'll figure out a way to do a wholesale to our list of investors.
Yeah. And again, don't get me wrong, I'm still doing some fix and flips.
Yeah.
We're still doing some burrs by all means, but we've kind of pivoted. And again, we're converting a motel. We got our hands full, of course. But the favorite deal that I'm definitely looking at right now and looking to do more of is those wholesales. Just because it's easy and they're quick. Like you said, 2 months typically is enough time to buy it, clean it out, clean it up, get it on the market, deal with some of the, buyers and all the issues that may or may not bring, of course, and then getting it sold and making anywhere from $35,000 to $50,000 on these flips without having to fix them.
And when you sell it retail, I think the person that's buying, they also feel like they're getting a value, because we're not selling it to them at the high ARV. We're selling it to them at the current ARV or the as is type of a value, right? But we're getting it obviously way less than that. I think that's where if we can get some of those deals, I would love to get those, but just
they're harder to get.
Lucky.
They are.
They're definitely harder to get.
Some people do wholesales where they just do paint and carpet, and that's fine too. I'm not against doing those, but I prefer the ones where I just clean them out and clean them up.
Yeah, we don't have to do any like paint, flooring, just
minimal stuff, but not going in and doing any of the major things like the HVAC, the kitchens, the bath.
Agreed.
Yeah, so on and so forth. So, Sharad, I want to respect your time, man. But before we wrap up, let's talk about Resimpli, man. I've been using Resimpli exclusively for, man, it's probably 2.5, 3 years now. I'm loving it. It is such an awesome platform. My team loves it. I know you guys have launched a ton of new things over the last, couple quarters even. You guys got seller websites. You guys got all sorts of cool new features. Fill us in, man. What are you seeing on your end, as the owner and, talking to a lot of the users that, people are loving?
I think the number one thing is just having one software where they can really, like, number one thing where it is, hey, I'm able to just come to Resimpli, eliminate need for a bunch of different software. Like,
bunch
that's
of stuff.
Number one.
Websites,
number
phone
one,
systems,
list tracking,
all that
calling, texting, all that. I
Mhm.
think that's the number one thing we hear.
Which is awesome, and I agree.
Yeah,
it is very
I mean,
nice.
that was the it's crazy. Like, last time when I moved to Carlsbad, that's kind of when the Resimpli started. I used to live in Chicago. I moved to Carlsbad, and I started looking at software. This is back in like 2015, 16. I started looking at software that I needed for my business. And I'm a very simple guy. I needed something I could log in. Everybody in my team could log in and just kind of be there, just do everything. We didn't find anything, and that's when we started Resimpli. But now, like, we're moving forward. Like, next month, and I know you and I talked about this a few times. We're rolling out like disposition website. So you'll have your
cool.
buyer. Yeah. So you'll have websites. So you have your seller website. Now you'll also have your buyer website, and they'll be fully integrated with. It's not just having buyer website. It'll be fully integrated with your lead. You can have people submit offers on those websites.
On the
those
sites,
offers will
that's
come
sweet.
on the site, and they will come right into your lead. So that's kind of what we're working on. That's coming next month. Just a couple of other minor updates, but the disposition is the biggest update. But like, in my business, when I look at it, I don't use any other software, nothing.
Man, that's
at all.
amazing.
Like, everything is all within, like, everything from my core caller, my lead management caller is the same person, but my project manager managing all the rehabs, everything, my bookkeeper, my accountant, everybody's on Resimpli.
All of it.
That was
You guys
everything.
can eliminate all the other softwares.
Yeah.
And use
no Google Drive,
Resimpli.
no Dropbox, nothing. Everything, like, from start to finish is there. Everything. Like, we don't have any other subscription. I mean, we use, I guess, PropStream for list buying, but we use it like when we need it.
Yeah, for comps and stuff like that. But regardless, all the other softwares for emailing, calling, texting, storing photos and documents, e-signature, seller websites. You had mentioned that the dispo sites are coming soon to be able to market your deals and collect information and even accept offers or receive those offers. Doing the email, one of the things that I've been using more and more is the ability to email out the buyers list and text blast out the buyers list, with deal notifications. Hey, I got this wholesale deal. Anybody interested? Before I list it on the MLS, 2 or 3 clicks and boom, the whole list gets the email.
Yeah, with the dispo, it's going to be much simpler. You just take the URL of the website that you have in Resimpli, say, hey, this is a new property, check it out. It just takes them to the listing page, and you say, hey, just put your offers
all of
on
it's
there.
Right there.
Yep. Yeah, and they say, just if you have, and you can host your open house. You can say, hey, we have an open house from this time to this time. They can click attend open house, and then it'll just, everybody that shows interest will come right into your lead, your buyers database. So I mean, that was the whole vision with the company, was just log in, should not need anything else, and it feels pretty good to be able to get to that point where I literally have no other.
And you guys have a kick-ass mobile app too.
Yeah, we have a mobile app
is
too.
great. I use the mobile app daily.
Yeah, we're making some updates to Driving for Dollars, updates coming out next week. I think we're testing this week or then a couple of weeks, where you can upload multiple pictures and videos of a property as you're driving. Oh,
that's sweet.
Yeah. So that, sweet. And then a couple of other small things that'll be coming. So it's been really good, man. I think it's been very grateful. I know you and I've talked about being grateful, a lot. So I feel very grateful just to be in a position to add value to other investors, and you feel like you built something, and I should say we as a company, as a team, have built something that's helping people be more successful. I mean,
absolutely,
there's nothing more gratifying than that. Then you see, people making more money and able to, achieve their life dreams because of something that you're part of. So that's been the most amazing
Sharad, I
thing.
work with a ton of students, and one of the main things I tell them is that investing doesn't have to be hard or difficult unless you make it hard or difficult.
Yep.
We can really simplify investing if we can focus on doing two things. Number one, try to make ourselves more efficient.
Right.
And really more so than that is make ourselves more effective, right? Being efficient and being effective are great things. Guess what, guys and girls? Resimpli is the tool that I'm constantly talking about that will make your business run more efficiently and make you and your time more effective by having less softwares, having all these tools all in one place, and having the ability to collaborate with your team and really save money by not having 14 different subscriptions every month and just having the one. It is phenomenal.
Like even in $99, we include driving per dollar, website, CRM, accounting, everything. Like just imagine if you had to, I mean, I'm not trying to sell anyone. Like I think the whole point is like use a system, you stick with it. It doesn't matter. Right. We've tried to just create a system that's very simple to use. You could literally use, like I use this for my day-to-day,
just
like
a notepad.
I have a sticky note that I put in. This is what I need to get done with today.
Yep.
And then it just keeps it super simple for me. It's effective. It's worked for me. Sorry, I don't know what happened to my video here.
Oh, you're back.
Yeah, there we go.
No problem.
But sorry, something's going on. But yeah, I mean, it works for me. And then just keeps me in check with what I need to do. It's about, like you said, being effective, being efficient. And, I believe we've created something that just makes you a lot more effective and efficient. I think those are really good 2 words to describe what we're doing with Resimpli.
I love it, man. Sharad, thank you so much for coming on today.
Thanks, man.
It feels good to be back podcasting. Man.
I know,
it's been
man.
like 9 or 10 months since I've done a podcast for the Discount Property Investor podcast. Done a couple other random ones, but for this show, it feels good to be back. I'm so happy that I got to connect with you, talk a little bit about interest rates and inventory and BRRRRs and wholesales. And of course, Resimpli. Guys, check out Resimpli if you have not already. It is a phenomenal product. All right. It's a CRM. It's a marketing machine. It's going to help you build your buyers list. It has websites. It has phone systems, the ability to call, text, collaborate with team members, all the above. Guys, check it out. Resimpli, RESIMPLI.com. And if you use /Dave, you can get yourself a special bonus over there on that site as well. I'll put that link in the show notes. Sharad, any parting words for us, brother? Good to see you, man.
No, man, just really good to see you. It's like I always feel like so much like this feeling of positivity, and then just like feel a lot more energetic talking to you. So I appreciate you having me on the call, man.
I appreciate the kind words, man. Life is too short to not try to seize the day and try to, just really grasp the moment and just,
I've been reading a lot about philosophy last few weeks. And I read this something, I don't know what it said. Life is long if you live it properly.
I love that.
Yeah, life is long if you live it properly. So that's what kind of I've been focusing on. It's been good, man. I've just been trying to be grateful about everything that's happening in my life, and that's what it's all about.
You look good, you sound good, and I'm happy to hear that you're back in California with some good weather. I know your wife's going to be happy about that as well too, due to the weather. But yeah, all things great, man. Resimpli is phenomenal. Like I said, I've been using it for several years now and loving it. So guys and girls, if you are listening, definitely check it out. Again, that link is RESIMPLI.com/Dave. And you are going to love it too. Sharad, thank you for your time. Thank you for coming on. Thank you for sharing insights about your business and, the flipping and the economy and all these things. And as always, it is so great to get to connect with you, my man.
Thank you, man. Thanks.
Signing off, guys. See you next time.
Thanks for listening to the Discount Property Investor Podcast. If you enjoyed this episode, please like, share, and subscribe to help us reach a wider audience. To jumpstart your real estate investing career, please visit freewholesalecourse.com, the most complete free course on wholesaling real estate ever. We would also appreciate it if you left us a review on iTunes or Stitcher. Thank you in advance for your support, and remember, you make your money when you buy, and you get paid when you sell. Now let's go build some wealth.